So we are going to start the topic dividend decision. So we are discussing recently that three kinds of decisions are taken. Quickly tell me what are these decisions?
Financing decision and investing decision and dividend
Dividend
decision.
decisions, right? So financing decision we have learned the sub chapter. Which chapter we have learned regarding financing decision?
Capital structure and cost of capital
Yeah. Which chapters we have learned regarding investment decision?
is capital budgeting.
Capital budgeting. And the dividend decision is about how much is to be paid and how much is to be retained by the
Retail.
company, right? How much is to be retained by the company. Okay, I'm sharing the screen
Yes, sir.
once again. I think
Yes, sir.
now screen is visible and screen is also moving. Video is working. Okay, so this
Yes, sir.
dividend policy refers to the split between the money which is payable to the shareholder and how much is to be retained by the company. Company needs to retain
Yes, sir.
money for its growth. Unless money is retained,
Yes, sir.
company cannot grow. If you have remembered earlier, we have learned the formula of growth. Can you recall any one formula of growth? How you are calculate? How you are calculating growth? Growth का formula कुछ याद है?
B into R.
B into R,
Small
and
b
you
into
know B is the retention
yes,
ratio. That means growth depends
earning.
upon the retention, right? And the dividend decision is
Yes,
about retention ratio and payout ratio. How much is paid? That is payout
yes,
ratio.
sir.
How much is retained? That is retention ratio. And you know they are opposite of each other.
And risk.
Payout is 80%, retention is
Yes,
20%, like this. Okay.
20.
And ultimately, the objective of
Yes,
this
sir.
dividend policy is to ensure that we'll pay dividend in such a way that the ultimate objective of financial management is achieved. And the ultimate objective of financial management, you know, is value experience. Right?
Yes, sir.
So dividend decision has
Yes,
to be taken in such a way, or dividend policies needs to be framed in such a way that the ultimate objectives of financial management is achieved. Right?
yes, sir.
And
Yes, sir.
we are also talking right now, the farm needs to grow. And for this growth, it needs fund. But if dividends are
Yes,
paid,
sir.
if dividends are paid to the shareholders, then it will reduce the farm's reserve. Farm's retention will be
Yes, sir.
reduced. Is it not? So the farm has to draw a
Yes, sir.
balance that how much has to be paid, how much has to be retained. If everything is
Yes,
paid,
sir.
then growth will be affected because retention will not be there. If nothing is paid, then shareholders may be dissatisfied. Okay, they expect a kind
Yes,
of
sir.
cash flow from the company. So therefore, both the aspects needs to be taken care of. Okay, and the dividend policy also has a bearing on the capital structure of the farm. If the farm can pay dividend, accordingly he can decide what should be the ideal capital structure for him for that farm. That can be decided. Okay, and dividend policy
Yes, sir.
determines the portion of the earning that is to be paid to the stockholders and what portion is to be retained by the business. When I say dividend, dividend means it is it in fact it constitutes the cash flow which accrues to the equity shareholders. Equity shareholders are supposed to receive that. And when I say retained earning, this means this is the kind of fund which the company, which the business house, which the farm retains with it for its future growth. Both dividends as well as retention, both are desirable and they are conflicting. If I pay more dividend, so retention will be less. Is it not? If I
Yes, sir.
retain more, so
Yes, sir.
dividend will be less. Higher dividend means less retained earning.
Yes, sir.
Is it not? And more retained earning
Yes,
means
sir.
less dividend. So therefore, for the finance manager, it is a quite challenging thing that how much is to be retained, how much is to be paid out, keeping in
Payout.
view the overall objective of the farm. Now the question comes: why shareholders expect dividend? Now, are you seeing this slide now? This slide is visible.
Yes, sir.
Okay.
Yes.
Shareholders' expectations of dividends are based on primarily these three reasons. Number one is what is the number one point? Please read.
Reduction of uncertainty
Reduction of
due to
uncertainty.
current earnings.
Yeah, reduction of uncertainty. Shareholders feel that if dividends are paid, the uncertainty is reduced. They feel that okay, some kind of cash flow has come and company is doing well. Okay, and they
Yes, sir.
become sure that some kind of return is coming from the company. And one more reason is that indication of the company's strength and sound position that reposes confidence in investors. So investors' confidence is retained,
Yes.
investors' confidence is reposed because when dividends are paid, it gives an indication that the company is strong enough to pay money. It shows the company's strength and company is sound to make payment. Company is having enough cash flow to pay this kind of dividend. Okay, so that is one more reason.
Yes, sir.
And also shareholders need a regular income. For their current income also they expect dividend. These are the primary three reasons on the basis of which investors' expectations are based. There are various factors that affects farm's dividend policy. Number of factors are there. Okay, some of the
Yes, sir.
factors, first of all, these six factors we will be covering. Then some other issues also we will be covering subsequently. First of all, first factor is that farm's contractual obligations, loan agreement, insufficiency of the cash, all these things affects the farm's dividend policy. If the farm has got some kind of contractual obligation to pay some cash, so cash will not be sufficient to cash may not be sufficiently available for payment of dividend. So it will affect their dividends policy. If there is a contractual obligation or there is a loan agreement, when loan needs to be repaid or loan needs to be serviced, and for that thing cash is required, and there is insufficient cash, then dividend cannot be paid. Is it done?
Yes, sir.
Okay.
Yes, sir.
Okay. Next factor is that liquidity or working capital requirement. Okay, farms in order to run the business, farm needs liquidity of funds. So funds should flow, right? And farm might be having working capital requirement on day-to-day basis. It needs some kind of fund, some kind of cash flow. So that affects farm's dividend policy. If dividends are paid, then working capital positions will be affected. If the farm has is not able or farm doesn't have ability to borrow money, then also farm's liquidity position gets affected, and that also affects farm's dividend policy. If third point is that need for expansion, if the farm needs to expand itself, farm for the growth purpose, farm needs to planning some kind of expansion, if the farm would like to retain maximum money, so retention is important,
Yes, sir.
dividends will be affected. Similarly, business cycle. You know, business sometimes it grows, sometimes it diminishes, sometimes it goes stays at a maturity stage. So this cycle affects your dividend policy. Okay. If the farm is at the growing stage, farm might be having more profit. Dividend can be paid. If the farm is at the declining stage, cash flow may not be sufficient. So dividend policy will be affected by that. Then the fifth factor is that factors relating to the future financing. What is the future financing plan of the farm? Whether the farm is capable of arranging some kind of finance in future, that will also affect farm dividend policy. If the farm is not capable, then farm has to retain maximum fund and pay less dividend. And the past dividend policies, how far how farm was paying dividend in the past, and what is the shareholders relationship, what kind of relationships the farm enjoys with the shareholders, whether shareholders are expecting a kind of regular dividend, all shareholders are not expecting. So all these things will be affecting farm's dividend policy. Understood these six factors? Theoretical things.
Sir,
Just
yes,
just
sir.
have an idea. Yeah. Did you understand?
Sir,
Yeah.
sir, can you explain business cycle again?
Business cycle, you see, normally, do you have any of you have some idea about the business cycle?
No, sir.
Okay. You see, there are various stages of a business cycle. Sometimes you see business grows after a particular stage. Then business declines. Okay. Or business
Yes,
reaches at the stage of maturity. Okay. So at a particular stage, maybe
yes,
at the initial stage, business grows. After that, it reaches maturity, then it declines. Okay. So its cycle maybe for 10 years. Suppose initially maybe in the 5 to 6 year business grows. Okay. then it becomes a stagnant,
Yes, sir.
doesn't grow, then it gradually declines. This is how cycle moves. Then again it will grow. Okay, that period is called as the business cycle. Okay. Now
Sir, but how it is affect the dividend policy?
how it affect the dividend policy? Now let us say business is at a growth stage. Growth stage means what will happen? Increasingly, every year after year, you will find profit will be more. Isn't it? Farm can comfortably pay
Yes,
dividend. But let us say it is at
yes,
the
sir.
maturity stage, business will be stagnant. Isn't it? So one kind of fixed dividend can be paid. Or let us say business farm is at the declining stage. The year after year, profit will be reduced. Isn't it? The farm
Yes,
may
sir.
decide not to pay dividend. Or maybe
Yes, sir.
it may decide to reduce the payment of dividend. Is it not?
Yes, sir.
This is how business cycle
Yes, sir.
affects the payment of dividend. Or farmer can do one thing, since it is in a growth stage, it may keep a reserve paying less dividend, so that at the declining stage also similar kind of dividend can be paid off. That kind of distance can be taken.
Yes, sir.
Is it not?
Yes, sir.
Are you getting? So these are the factors which affects the dividend policy. Now there are broadly four kinds of dividend policies which are there in your syllabus. We have to cover these four types. One is regular, second is stable dividend policy, third one is irregular, fourth one is no dividend policy. Okay,
No.
that means dividends are not paid. Okay, one by one we'll be covering this kind of dividend policy. First one is regular dividend policy. Here what happens? Dividend is paid as an usual rate, quite normal rate, as per the expectation of the shareholders. Normal dividends are paid. Okay, and this kind
Yes,
of
sir.
dividends can be paid, or this kind of dividend payments can be maintained if the company is having regular earning. If regularly company is earning, then it can pay regular dividend. Is it not? If there is a regularity in the earning, then dividend can also be paid regularly. It has got advantages. Regular dividend policy has got certain advantages, like it creates investors confidence. Shareholders
Yes,
become
sir.
more confident. Is it not? They feel that their investment is in safe hand. Then it stabilizes the value of the shares. Share value also maintains, share value doesn't go down, because it signals to the market that the company is alive, company is doing well, right? It helps in
Yes,
marinating
sir.
the goodwill of the company. Company's goodwill also maintained, because it shows to the external stakeholders that company is doing well, company is distributing its profit. It gives a regular income to the shareholders. These are the advantages of regular dividend policy. Okay,
Of dividend policy.
understood?
Yes, sir.
What is regular dividend policy?
Yes, sir.
Right. Now, coming to the next kind of dividend policy, it is called stable dividend policy. Okay. Here the dividend policy is stable, but when I say stable, the stability means different things. First of all, we see one kind of stability, we call it as the constant dividend per share. That means the dividend amount is constant. That's why we are saying it is such a stable. Suppose this year you have
Yes,
received 5,000, next year also you will be receiving 5,000. Next to next year also you will be receiving in 5,000. That's why we are calling it stable. So constant dividend per share, right? In this case,
yes, sir.
how it happens? A reserve fund is created. Company's profit will vary year to year, is it not? But same amount will be,
Yes, sir.
even if profit is less, same amount, profit is more, same amount will be paid. How the company manages this? Company creates a reserve fund, and out of this fund, dividend amounts are paid, fixed amount every year.
Yes, sir.
Okay, fixed amount of dividend every year. When even when earning of the company is not enough, money can be paid out of this. So constant amount, fixed amount, right? Therefore, it is called as stable dividend policy. Now, one more kind of stable dividend policy is that. Can you read the second point? What is written here? Constant
Constant payout ratio.
payout ratio. Your amount is not fixed, but the payout ratio is fixed. That means the fixed percentage of the earning will be distributed. Suppose this year company may decide that every year 60% of the profits will be distributed, 40% will be retained. Is it not? Profit will be varying. will be varying every year, is it not? But the
Yes,
percentage
sir.
of the payout will not vary. Suppose this year company has earned 5 lakh rupees, 60% will be distributed. Next year company is earning 8 lakh rupees, then 60% of the 8 lakh will be distributed like this. So there is stability
Yes, sir.
as regards to payout ratio. Payout ratio is constant. Understood?
Yes, sir.
Third is a different kind of dividend policy. It is stable rupee dividend plus extra dividend. Here what happens? Company maintains a stable dividend, a fixed dividend, maintains plus in certain years, in the year when the company gets some extra profit. Okay, it declares some additional profit, additional dividend. Okay, it says okay, your normal dividend is 10%, but additional 2% we are declaring this year because company has earned more money. Okay,
Yes, sir.
right. Why
Yes, sir.
this is done like this? Because next year, if the business is not uh, going on, suppose business doesn't happen like this, or profit is not that much, then shareholders will not expect higher dividend. They'll understand this is normal dividend, but in a particular year, because of some extra profit, because some extra profit has been had, and company has declared some extra dividend, right? The
Yes,
extra
sir.
dividend can be distributed either in cash or by way of bonus shares.
Yes, sir.
Okay, so this is one is constant dividend per share, then constant payout ratio. Third one is stable rupee dividend plus extra dividend.
The dividend.
This policy has got certain advantages also. It helps creating confidence in the investors, in the minds of the investors, that okay, there is a regularity in income, stabilizes the market value of the share. Market also understand that company is doing well, manages the goodwill of the firm, right? So this kind of
Yes,
dividend
sir.
also sends signal to the shareholders, to the investors, that the company is doing well, management is doing well, and it helps giving a
Yes,
regular
sir.
income to the investors. That is
Shareholders.
also one more advantage. Okay. Third kind of dividend policy is that irregular dividend. So as the name suggests, you see, these are the under this kind of dividend policy, companies do not pay dividend regularly. Okay. Why they do like this?
Yes, sir.
Due to uncertain earning. The earnings are not sufficient. Or due to liquidity, profit might be there, but cash flow is not available. Sufficient cash balance is not there to pay dividend. So lack of liquidity of resources. Okay, and sometimes company may afraid of paying regular dividend. Company think it may not be able to pay dividend, or due to some uncertainty in the business, company feels in future there may not be profit. Company doesn't want to pay dividend. Company wants to retain that money for its future growth. Okay, this kind of dividend
Yes,
policy is called as irregular dividend. Fourth kind of dividend policy is no dividend. Here, company purposefully decide not to pay any dividend. Okay, because company feel that money should be retained with the company and that should be used for the growth of the company. That is called no dividend. These are the four kinds of dividend policies you have understood. Okay, let
yes.
me repeat these
Yes, sir.
policies: regular dividend, stable dividend, then irregular dividend,
Irregular. No dividend.
no dividend.
No
Right?
dividend.
So depending upon the situation, different kind of dividend policies can be followed. Now, this is again little more theoretical things are there. We'll be covering up this all these things. What are the determinants or constraints of dividend policy? There are certain practical considerations which matters while deciding dividend policy. Can you read the first point? Only that red color.
Legal con.
Legal consideration. When you are deciding on dividend, or when you are deciding on the dividend policy, we have to take into consideration certain legal considerations. So certain legal aspects needs to be taken into consideration. For example, there are certain requirements under the Companies Act that dividend can be paid, let us say, only out of profit. Capital profits cannot be used for distribution of dividend. Okay, dividend cannot be paid unless depreciation has been provided for. So these requirements are there, is it not? So these legal considerations
Yes, sir.
has to be taken into account before deciding our dividend policy. Okay. Legal, there might be some contractual obligations also. There might be a kind of obligation to pay a kind of cash flow. That will also affect your dividend policy. Right? Now, second point.
Yes, sir.
Second point.
Stability of earning.
Stability of the earning. If earning is not stable, then that will affect dividend policy. Is it not? If earning is there are ups and downs in the earnings, then dividend policy, it will be difficult to have a kind of stable dividend policy. Is it not? It may be irregular. So that will affect our dividend policy. Is it not?
Yes, sir.
Third point,
Opportunities for reinvestment and growth.
if the company is having opportunity for reinvestment, a company feels that this much of money can be reinvestment somewhere and it will bring a kind of growth for the company. So it may decide not to pay dividend, not to distribute the dividend.
Yes,
Is it not?
yes,
Company
sir.
has got that opportunity. So that will affect your dividend policy. Point number four,
Financial consideration or cash flow.
financial consideration. We have to see whether finance is available or not. Profit is there. Profit is there, but that doesn't mean that cash is also there. That may be non-cash profit. Right. So we have to see the financial constitution, whether our finance, that the finance of the company permits to pay dividend or not. So financial constitutions are also important. Now point number five,
Level of inflation.
level of inflation also affects dividend. Why level of inflation affects? You see, every year we compute the profit of the company. Is it done? When we compute
Yes,
the
sir.
profit of the company, we charge depreciation. Is it done?
Yes, sir.
And
Yes, sir.
depreciation is charged on what? Charged on the original historical cost of the asset. Is it done? Yes or no?
That historical cost means the cost on which the uh, uh, product was purchased.
Huh? When the asset was purchased, on that amount only we will charge depreciation.
Okay, sir.
Okay. But let us you think, suppose
Yes,
that asset is to be replaced. By this time, the value of the asset must have gone up. Is it not? Value of the asset must have
yes,
been
sir.
increased. Okay. But we are charging
Yes, sir.
depreciation on a lesser amount. So the fund that you are creating by charging the depreciation may not be sufficient to replace the asset. Okay.
Yes, sir.
When you buy a new asset, we
Yes,
have to pay more. The fund we are creating through this depreciation charging process may not be sufficient to replace the asset. This happens because of inflationary scenario. Because prices increases day by day, so we face this kind of problem. Therefore,
yes,
if
sir.
the level of inflation is high, then we have to give more retention money. More money needs to be retained and less money needs to be distributed by way of dividend. Are you getting?
Yes, sir.
Okay. Now, sixth point is, please read the sixth point.
Effect on market price.
Normally, high dividend has got a positive impact on the market. If company is paying good dividend, then value of the
When
shares also
farm
increases.
is
Okay.
yes, sir.
So we have to see that what is the impact this dividend is having on the market price. On that basis, dividend policy can be taken. Point number seven,
Yes, sir. Tax effect.
tax effects also has to be considered. That whether the payment of dividend will be helping to our majority of the shareholders or it will bring a kind of additional tax burden on them, that aspect has to be considered. Interest of the majority of the shareholders as regards to tax need to be considered while deciding the dividend policy. Point number eight.
Nature of business.
So you have to consider whether business, the earning of the business is regular, stable, or it is inconsistent, irregular. On that basis, business dividend policy has to be decided upon. Point number 9,
Yes, sir. Market condition.
if market is down or market is depressed, then normally higher dividend needs to be declared so that it will send a positive signal to the market. Okay, so that aspect has to be taken care of. Market condition has to be kept in mind before deciding dividend policy. Point number 10,
Economic constraint.
what is the impact of the dividend on the value of the farm needs to be considered. Accordingly, the optimal dividend payout ratio has to be decided. We have to decide dividend policy in such a way that the farm's ultimate objective, that is value maximization, needs to be attended. Okay, point number 11,
Existence of company.
if the company is a old company, long standing existence, okay, it can
Yes, sir.
better
Yes, sir.
dividend policy, right? It may decide, because shareholders knows the company, it may decide to pay dividend or may decide not to pay dividend. So shareholders will affect because their relationship with the company might be good. Point
Yes,
number
sir.
12,
Types of company.
private limited company, closely held company, this kind of companies may go for conservative dividend policy. Okay, because this is a small group of people form this kind of company. Among them, depending upon their understanding, they may decide to accept less dividend or they may demand the more dividend. But large company, things are different. Aggressive dividend policy needs to be followed. More dividend maybe needs to be paid. Point number 13.
Yes. Financial needs.
If the company needs additional capital, then it has to pay less dividend. Is it?
Yes, sir.
Point number 14.
Financial arrangement.
So, like this, if there is some kind of amalgamation or merger plan is there, the dividend policy will be affected by that. Okay, if the two company has a plan to merge with some other company, company may decide to pay dividend to the existing shareholders. So accordingly, dividend policy will be affected.
Yes,
Point number 15.
yes, sir. Change in government policy.
So government's tax policies, government's industrial policy will affect the dividend policy also. Right. So 15 points we have understood. The one more point,
Yes, sir.
16 point, we'll be covering it under other points. Okay. Dividend policies of the other farms of the same industry. That means what kind of dividend your competitors are also paying. Competitors are paying. That also affects your dividend policy. Suppose
Yes,
your
sir.
competitor is paying dividend, you don't pay dividend, it will send a negative signal to the market. Is it not? That also matters. Attitude of the
Yes, sir.
management. Some management think that their attitude is like that they want to pay more dividend. Okay. Some management they do not like to pay more dividend. So attitude of the management matters. Okay. And a fear of being branded
Yes, sir.
as inefficient or conservative, etc. Sometimes management fears that if you do not pay dividend, then people will think that we are inefficient. So that also matters. Accordingly, they decide their own dividend policy. Understood? So these are
Yes,
the
sir.
certain factors and certain consideration which matters while taking a decision on dividend policy. Okay.
Yes, sir. Sir,
Yeah.
if मार्केट कंडीशन अच्छा नहीं है तो वो डिविडेंड कैसे ज़्यादा डिक्लेयर कर सकता है? तभी तो कंपनी का भी कंडीशन तो अच्छा नहीं होगा.
It is not necessary that market condition is not good means company's condition is not also not good. Okay. And you see, when the market is continuously, let us say market share prices are going down. So companies always try to bring a correction in the share price. So that will happen only when they send a positive signal to the market. अगर वो कुछ पॉजिटिव सिग्नल मार्केट को देंगे तो डेफिनेटली शेयर का डिमांड बढ़ेगा, अकॉर्डिंगली प्राइस शेयर प्राइस बढ़ेगा. एवरी कंपनी वांट्स दैट देयर शेयर प्राइस शुड गो अप. सो इट इज कमिंग डाउन. So suppose let us say your share price is maintained at 200. Okay, but you feel that gradually it is
Yes,
coming
sir.
down. So if you declare dividend, then more people will be interested to buy that share. So accordingly, share prices again will go up. So like this, share price can be maintained. Are you
Yes, sir.
understanding? Are you understanding? Okay.
Yes, sir.
So all
Yes,
these
sir.
16 points are theoretical things, but still you need to remember because that will be helpful to understand the basics of dividend decisions. Any other doubt you have?
No, sir.
No. Now, next we are going to learn various types of dividends. So as you can see, how many types are there?
Four types.
Four types:
Four types. What are they? Please read.
cash dividend,
Hmm,
bond dividend,
hmm.
stock dividend, and property dividend.
Property dividend. So from the names also you can understand. When you talk about the cash dividend, here dividends are paid in the form of cash. Okay, so it is very popular. Most of
Yes,
the
sir.
companies pay this kind of dividend. Okay, the earnings of the company are distributed by cash. That is called as cash. When I talk about the stock dividend, that means what is distributed? Shares are distributed
Uh,
by way of
uh,
bonus. Okay, existing
yes, sir.
shareholders get this kind of bonus shares. That is what we call it as stock dividend. Okay,
Stock
what is the
dividend.
third kind of dividend?
Yes, sir. Bond dividend.
Bond dividend.
Bond
Bond
dividend.
dividends are also called as scrip dividend. Here what happens, this is a peculiar thing you have to understand. Here when the company does not have sufficient funds to pay cash dividend, company wants to pay dividend, but it doesn't have sufficient funds to pay dividend. What the company can do? Company can make a promise to pay the dividend in a future date. Okay, it is a promise to pay. Company promises to pay the shareholders at a future specific date with the help of issue of bonds or notes. So company may issue a bond or may issue a promissory note to the shareholders that on a future date dividend will be paid. That is called as what?
Bond dividend.
Bond
Bond
dividend.
dividend or scrip dividend. Okay, right? Okay. Fourth kind of
Yes, sir.
dividend is called as
Property dividend.
property
Property
dividend.
dividend.
Property dividend, what happens? Some physical assets are distributed. Okay. Normally company stock items, company's inventories are distributed. Okay. And they are recorded at the market value. Right. Company's inventory, company's closing stock, all these items are distributed. So in exceptional circumstances where the company doesn't have money at all, but inventories are there, company may decide to pay this kind of dividend called as the property dividend. Sometimes share of the subsidiary companies shares are also distributed, or physical assets like inventories are distributed. But this kind of dividend is not very popular and not prevalent in India. Normally, we do not see this kind of dividend. Just theoretically, we need to understand this is there is a possibility that this kind of dividend can be paid. Understood?
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Now, so this is the substantially we have covered the theoretical part. Some more theories are also there we have to cover. So now coming to theories of dividend policy, as you can see this chart, you see so many theories are there. Can you read these
Yes,
theories of dividend policies?
Yes, sir.
Yeah, read what are
Traditional model,
traditional model. Under that,
dividend capitalization theorem.
okay, dividend capitalization theorem. There are two models: Walter model, Gordon's model.
Yes, sir.
Then
Then MM theory.
MM theory, that is Modigliani and Miller's theory. We'll be learning that thing. That is also called as the dividend
Yes, sir.
irrelevant theory. Then residual income theory.
Residual
reciprocal.
income theory.
That is also called as Solomon theory. Right. So like this,
Yes,
Yes, sir.
yes, sir.
some more theories are also there, but we did not bother about all this theory. What our syllabus says, only these three models. One is Walter model, one is Gordon's model, third one is MM theory.
Amendment.
So we'll stick to these three theories. Other things I'm just showing so that you can have a broad understanding that these are not the only theories. Other theories are also there in the field of dividend policy. Okay. So what are the theories we are going to
Yes,
learn?
Yes.
MM theory, Walter model, and Gordon's model.
Gordon model.
Okay, right? Now,
Yes, sir.
if we classify, taking those theories into consideration, we'll classify the theories of dividend into two broad parts. One is, can you read what is written here?
Relevance
Relevance
of
of
dividend.
Relevance of dividend. Relevance of the dividend means this theory says that dividend is relevant Relevant means it will affect the value of the farm. It will affect the share price. So my dividend policy will have some impact on the value of the farm. That's why we say dividend is relevant. When I said dividend is irrelevant, this side it is saying irrelevant theory. That means whatever dividend policy you take doesn't matter. It doesn't matter how much money you pay a dividend. Your value of the farm will not change. Your stock price will not change. Understood? So we can
Yes,
classify
sir.
these
Yes, sir.
things are two parts: relevance of dividend, irrelevance of dividend, or you can say uh, dividend relevant theory or dividend irrelevant theory. This theory says, that means approach says dividend payment is irrelevant. इसका कुछ मतलब नहीं है, आप कुछ भी पेमेंट करो, value of the farm will not change. But these theories, what are these two theories? Can you read it?
Walton's model
Walt.
and Gordon.
Yeah, Walter's model and Gordon's model. They says no, dividends are relevant, right? So these are the theories we are going to
Yes,
learn.
sir.
Okay. So the first theory we are going to the first before learning the first theory, we will be understanding what is the meaning of relevance of the dividend. Just now I explained what is the meaning of relevance of the dividend. That means dividend policy affects the value of the farm. When I say dividend policy affects the value of the farm, that means I am saying dividends is relevant. That means
Yes, sir.
if dividend payout changes, market value will also change. But when the
Yes,
dividend
sir.
payout changes, market value doesn't change. Then that means dividend is irrelevant.
No.
Okay.
Yes, sir.
Irrelevant.
Okay. If dividend is relevant, then we have to very carefully decide the payout ratio. If you are saying it is irrelevant, then doesn't matter. Any payout ratio will do. Okay.
Yes, sir.
And when I say
Yes, sir.
dividend is relevant, we have to arrive at something called as optimum payout ratio. Optimum payout ratio means the best payout ratio. Then what is that best payout
Sorry,
ratio?
sir.
That means the best payout ratio. Best payout ratio means
Yes,
payout
sir.
ratio at which market value of the share is highest.
No.
Okay. With that
Yes,
payout,
sir.
ratio, the value, market value of the shares will be highest. That is my optimum payout ratio. And if I believe that dividends are relevant, then I have to arrive at that optimum payout ratio, or the management has to arrive at that optimum payout ratio, and accordingly, dividend policies can be framed. Understood?
Yes, sir.
Yes, sir.
So we'll cover the first business relevant theory. This is called as the Walter's theory or Walter's model. Walter has given a model. Okay. And the who has invented this particular model, his name is James E. Walter. You can see his photograph. He has developed this theoretical model. Okay. And this model shows
Yes, sir.
the relationship between dividend policies and the common stock prices. What is the relationship between the
Yes.
relations between your dividend policy and your stock prices? That
Stop.
he has explained. Okay. The
Yes, sir.
basic premise of this theory is that the prices means the share prices reflect
Yes.
the present value of expected dividend. This concept we have discussed earlier also. In the
Yes, sir.
dividend calculation model, we have
Yes, sir.
understood that what is share price. Share price is the present value of future dividends. Future dividends means
A
expected.
dividend.
On the basis of
Yes, sir.
this concept, he has framed that his theory. And his theory says,
Yes.
you see, I am establishing the relationship between dividend policy and the prices of common stock, and dividend is relevant.
Dividend.
Dividend is relevant.
Yes, sir.
Okay, dividend matters. And there are certain assumptions to this Walter's model. Let us read these assumptions, then you will be able to understand the theory. Okay, can you read these
Yes,
assumptions?
sir.
First assumption.
Yes, sir.
Yeah, please read out.
The firm finance all investment through retained earning, that is debt or new equity is not issued.
Now we have to understand this very carefully. That means he has taken an assumption that if the farms needs money, why the farm will be needing money? For its own investment, for
For
future growth, right?
sir.
Here
Yes.
his assumption is that farm can get such kind of money only from retained earning. मतलब farm का पास और कोई option नहीं है. Farm cannot borrow a debt, firm cannot make fresh issue of equity share. So retained earning firm has to use. So that is his first assumption, that firm's all investment is from retained earning. If the firm needs investment, he has to meet it through retained earning. Okay. And what is the
Yes, sir.
next
Yes,
assumption?
sir.
Yes, sir. The firm's internal rate of return and its cost of equity capital are constant.
Internal rate of return. That means the return which firm's earning. That we'll call it as R. That is firm's return. Okay. Here the theory says firm's return is constant. Assumption is that constant. That means always in this theory he has assumed it is constant. Practically it will not be constant. But when we are testing that theory, you have to assume that returns are constant. And the cost of equity. Cost of equity, you know, KE. Cost of equity is
Yes, sir.
also constant.
Yes, sir.
Okay, cost of equity is constant. We have we know how to calculate equity cost is constant, returns are also constant. Now, third point.
Sir, then dividend is also constant
Which one?
because cost of equity. Uh, if cost of equity is constant, this result may dividend will be constant because cost of equity is the dividend.
Cost of equity is not the dividend entirely. You are partially right. You are partially right. Cost of dividend may not be exactly the dividend. Okay, why I am saying
Okay,
that?
sir.
Because okay, what is cost of equity? Cost of equity is the expectations of the equity shareholders.
Yes, sir.
Is it not? For a company,
Yes, sir.
whatever the shareholders are expecting, that is the cost for the company. And equity
Yes, sir.
shareholders not only expect dividend, they also expect price appreciation.
Yes, sir.
Okay.
Yes, sir.
So both the factors has to be taken into consideration to arrive at the cost of equity. The cost of equity is in long run it is dividend. Okay, but it also includes the factor of price appreciation in it.
Okay,
Okay.
sir.
So, but you are what you are assuming, that assumption will be coming shortly. That dividends are also constant. We'll be taking that assumption also. Okay. But the logic you showed, that you are saying that since cost of equity is constant, dividend is constant. So that may not be right. And cost of equity is not necessarily same as dividend.
Yes, sir.
Are you getting?
Yes, sir.
Yes, sir.
अच्छा.
सर
Now,
बट रिटर्न तो हर टाइम सेम नहीं हो सकता है ना, तो रिटर्न
नहीं
कैसे
रिटर्न
कांस्टेंट
सेम
होगा?
नहीं हो
रिटर्न तो
सकता. मैं ये नहीं बोल रहा हूँ रिटर्न सेम है. बट ए मॉडल को टेस्ट करने के लिए हम अज्यूम करते हैं रिटर्न सेम है. नहीं तो मॉडल को टेस्ट नहीं कर पाएंगे. अगर आप रिटर्न को फ्लक्चुएट करेंगे तो अकॉर्डिंगली मॉडल में आपको चेंज लाना पड़ेगा. रिटर्न आप फ्लक्चुएट कर सकते हैं. यू कैन फ्लक्चुएट द रिटर्न. ओके, बट suitably you have to
ओके
bring
सर.
some changes in the model so that it can be tested.
यस सर.
ठीक है. So he has brought this theory and he has developed this model, and to explain that model to all of us, he has assumed this is constant. Don't change it. He said don't change it. First test this model, don't change it. Okay.
यस सर.
But don't
यस सर.
think that
Yes, sir.
actual returns are constant. Actually returns are not constant. Actually cost of equities are not constant. But for this testing of this model, they have to be assumed as constant. Therefore, that is why it is called as assumptions. Assumptions are not facts.
यस सर.
Okay. Now, next assumption is that
यस.
your earnings will not change, dividends will also not change.
All
Right?
earning
Yeah. Earnings will not change, dividends will also not change. That is also assumption. Okay. As you told now, dividend will not change, dividend will not change. Farm's earning will also not change. Okay. But considering these assumptions, we will test the
यस.
model. Okay. Then only we will be able to understand whether dividend
yes, sir.
is relevant or not. Okay.
यस सर.
So let
Yes,
me
sir.
repeat that assumption. First assumption is that all investments are from return earning.
इज ओनली.
Okay. Then
यस.
internal rate of return,
इंटरनल रेट.
Internal rate of
cost of
return
equity, both are
and
constant.
cost of equity are constant.
all earnings are either distributed as dividend or reinvested internally. That means
Reinvested.
either kept as retained earning or distributed as dividend. Then earnings are constant as well as dividends are also constant. Earnings and dividends will never change. Okay. With these assumptions,
Yes.
he has developed a model. He has developed a theory. ओके क्योंकि वो कांस्टेंट नहीं रखेंगे थ्योरी कैसे अप्लाई करेंगे अगर आप बोलोगे डिविडेंड बार बार चेंज होगा थ्योरी में डिविडेंड कौन सा फिगर लेंगे ठीक है अर्निंग बार बार चेंज होगा so we have to assume it is constant and then we'll test the model okay this
Yes,
model
sir.
is that this model is here but one more assumption is that the farm has a long or infinite life that means farm has got a long life almost like infinite that is one more assumption okay on that assumption, he
Yes, sir.
developed this
Yes, sir.
model. It says P. P means market price. Okay. Market price of
Yes,
the
sir.
share is equal to D. D means dividend, which is constant. We have assumed, is it not? Plus R
Yes,
by
sir.
K.
Yes, sir.
R means farm's own return, internal
Re-
return. K means cost of equity. Okay. Multiplied
yes, sir.
with E
Yes,
by
sir.
D. E means earning, D means dividend. That means how much you have earned, how much you have dividend. Earning minus dividend means what is retained? That means retention. Is it not? If I
Yes, sir.
use dividend from earning,
Yes, sir.
I will retention. Whole divided by KE. This is the formula. He says this is how farm's prices are determined. Meaning he says you see dividend has some impact on the farm. That means what exactly he says? Farm will grow. Is it not? And shareholders
Yes, sir.
expect
Yes, sir.
dividend. If I now you see both of you are watching the slide.
Yes, sir.
Yes,
So
sir.
if I divide into
Yes,
two
sir.
pieces, let us say I am dividing it two pieces. What will happen? D by K plus R into K multiplied with E by D by K. I can divide into two parts.
Yes.
Is it not?
Yes, sir.
Okay. D by
Yes,
K
sir.
means D by K means the future dividends are capitalized at cost of capital, cost of equity. Okay. This is the future dividend.
Yes,
Future
sir.
dividends I am capitalizing at cost of equity. That means I am arriving at the present value of future dividends. Understood?
Yes, sir.
So
Yes,
P
sir.
is present value of future dividends plus what is this? This is the retention money. Retention money will
Yes, sir.
grow at this rate. How why I am multiplying? Multiplying R by K means this will bring growth. R by K will bring growth. So if I multiply, normally what will happen? Earnings will be more, is it not? Suppose earning is 12% and K is 10%. So I have to multiply it with 12 by 10. Is it not? मतलब it will be more than 1. इसमें multiply
Yes, sir.
करेंगे तो I will be getting my retention will grow at that rate. And that
Yes, sir.
growth I am capitalizing. That means I am arriving the present value of that growth. So exactly what he is saying that price is the present value of dividend plus present value of growth.
Yes, sir.
Are you getting?
Yes, sir.
Yes, sir.
Understood the formula?
Yes, sir.
Yes,
Okay.
sir.
This is what the formula says. P is the market price per share. D is the dividend per share. E is the earning per share. R is the return on investment. K is the market capitalization rate. Okay. This is the simple formula he has
Yes.
to. Okay. That means what he is saying that market price has got two components. One is present value of dividends. Second is the present value of the stream of gains. What is the stream of gains? E minus D. E minus D means earning minus dividend. Earning minus dividend means what is the retention? The retention will grow at this rate R by K and that will be capitalized. To arrive at the present value, again I am dividing with K. So these
Yes,
two
sir.
components has a bearing on the value or has a bearing on the market price. Therefore, you see dividend matters. Here also dividend matters. So dividend is relevant.
Yes, sir.
Are you understanding?
Yes, sir.
Yes, sir.
Okay.
Yes,
So
sir.
again he says that means the Dividend policy depends on the internal rate of return as well as the cost of capital. Cost of capital is KE and internal rate of return is R. So R by KE. R should be more than KE. Okay, KE is my cost of equity. R is the my earning. My earning should be more than the cost of equity. Otherwise, why should I run the farm?
Yes, sir.
Right.
Yes, sir.
Okay.
Yes, sir.
So Walter model says if R is more than KE, he suggested in case R is more than KE, then distributes the earnings to the shareholders. That means, sorry, if R is more than KE, that means your own return is more than the cost of equity, then you should retain the earning. Matlab, you need not distribute any dividend. You should maximize the returns. Okay. And if R is less than KE,
Yes.
then you should distribute. So you have to compare whether R is more than KE or R is less than KE. If R is more than
Sir,
KE,
if R
yeah, tell me.
Sir, if R is less than KE,
Uh,
then company has a loss. Then company कैसे declare कर सकता है dividend more?
company
अगर
need not be company has a loss, but company is having less profit. Okay.
सर लॉस तो होगा ही क्योंकि रिटर्न तो
Loss
कम
is
होता है
देखिए
ना
R
कॉस्ट ऑफ
you
इक्विटी से.
what is KE? KE is the shareholders expectation. Suppose shareholders
Yes, sir.
expectation is 20% and you are earning at 15%.
Yes, sir.
ठीक है? You are earning at 15% means
Yes,
your profit is 15%. Is it not?
yes, sir.
Your profit is
Yes,
15%.
sir.
But shareholders are expecting 20%. But you are
Yes, sir.
incapable, your company is incapable of paying 20% return. Since your company is
Yes, sir.
incapable, you should pay back the entry money to the shareholders. Let shareholders take that money, let them invest, and if they are capable of earning 20%, let them earn 20%. That is the concept. Are you getting?
Sir,
Since
और
company is
no,
incapable of earning KE, that is 20%, company should distribute maximum dividend so that shareholders can take their own independent decisions.
okay, sir. Yes, sir.
Okay. In fact,
तो कंपनी मैक्सिमम 15% तक ही डिविडेंड डिक्लेयर कर सकता है.
maximum 15% declare कर सकता है और in this example जो दिया, this theory suggests company should declare the entire dividend. That means entire 15% जो भी profit है पूरा वो dividend दे दे.
Okay, sir. Yes, sir.
Right? Okay. Now, in fact, what he has done, Mr. Walter, I'll be quickly skipping. Mr. Walter has divided the farms into three categories. One is growth farm, second is normal farm, third is declining farm. And he has explained which farm should declare how much dividend. Okay. Growth farm should pay
Yes,
less dividend because farm can keep that money and grow. Declining farm should pay more dividend. A normal farm is indifferent. It may pay any kind of dividend. Okay, it may pay any
yes,
kind
sir.
of dividend. This is his conclusion. What we'll do, we'll stop here today's class, but we'll again catch up. I will again starting with Walter's theory. Tomorrow I will be repeating this theory. Then we'll go to the next theory. I think that will be better.
Yes,
Yes,
sir.
sir.
Okay. Next
Sir,
class, what we'll
tomorrow
do?
at what time?
I will be communicating
Yes,
to you. So what I will be doing next class? First we'll start from Walter's theory. This class we covered mostly theoretical portion. So Walter theories we'll be covering shortly. And next class we'll be again recapitulating Walter's theory. We'll complete it. Then we'll go to the Gordon's theory. I think that will be better. And timing I'll be informing you shortly. Thank you very
okay,
much.
sir.
You have any query?
Thank you, sir. Sir, I was searching your video on YouTube, but I didn't get any video.